Hello everyone, my name is Jason DeLorenzo, the Wizard of Ops. In this video, I will walk through the option teller dashboard and give an idea of what each field does. The first square is giving you filters that you can down select from our massive database which trades you want to see. The symbols field gives you an idea of which symbols you want included in your analysis. So you can include more than one symbol here. Trade types down select between calls bought or sold or puts bought and sold, or all. We do group all of our trades by spread if that is applicable. The start date and end date gives you a range of the timing of transactions that you would like to see. The minimum premium gives some levels of premium in order to down select how much money that you think is pertinent for the underlying that is in there. The second row is a query on a single option name. So the target strike, for instance, if I put in 725, I will get both of these transactions by down select by target strike 725. The option expiry, if I want to target an expiry that I want to see, I put it in here. Option type down selects between puts and calls. The VIP filters are checkboxes that include all bullish trades, all bearish trades, all sweeps, or expired contracts. The next square gives you the results of your query. Note that on each header, you can sort by clicking on the header, both ascending, descending, and not sorted. This first column is the symbol of your options. Second column is the timestamp, which is the time that the option was executed. The expiry is the expiration date of the option. The DTE is how many days until expiration between the timestamp and the expiry. The spot price was the price when this option was traded. The strike is the strike price of the option with the type right next to it. So a P is a put and a C is a call. Contracts are the number of contracts traded. The premium paid is how much money was paid for this transaction. If the options were sold, the premium paid will be negative. The relevance column shows the short-term conviction of the trader. The higher the number of relevance, the more short-term conviction the trader has on their trade. IV represents the implied volatility of the options traded if it was a single option. Tied to underlying means that an equity trade was tied to this option trade. If it says yes, that means there were equities traded underneath. The customer trade is the type of trade that was executed. For instance, here is calls bought, but there are also ratios and spreads and verticals and complex trades as well. Assumptions is the most likely motivation of the trader. For instance, here we have calls bought. The assumption would be a bullish bet. You will notice that sometimes these rows are highlighted into a darker green. That means that there was a sweep. So right here we see on June 15th, there was a 3 DTE sweep of $724 strike calls. And there were 1344 contracts. So this has a very high relevance of 98.2. Someone was very bullish on June 15th. The third row are the consolidated trades. Any trade with 49 or less contracts are grouped into one easy to read line. This row is the date of the trades. This column is the date of the trades. This column is the symbol. This column is the contracts that are traded. So these are all trades with 49 contracts traded. And the premium paid is the total net premium paid for all of the trades for 49 contracts in SPY.
We invite you to start your free trial today at option-teller.io.